Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Welcome to episode 10. I was supposed to be recording this episode on the 8th. I hope you can see the date here. I was supposed to be recording this on the 8th of August. On the 7th of August. Today it's actually the 6th of August. I told you guys that uh, this market will move higher, will actually take off before the 7th, the date that which news releases are going to be conducted. We are at 10 a.m. I hope you can see the time here. So it's August the 6th. Tomorrow on the 7th, we're going to get the interest rate releases on the 8th of August. We're going to get the interest rate releases uh, on the British pound, the interest rate decisions. So here are the votes, and we're going to be looking at that tomorrow. Today, I'm talking to you about the market, buying the rumor and selling the fact here. The investors are trying to buy the market ahead of the interest rate decisions, which will be happening on the 7th of of August. So let me show you the market had not moved just yet. This is just a small movement that might give us a reversal here. This is just a this purple line is just a replica of what will happen in the future. It's just an assumption that the market reversed here. This part is this part, and this turning around is this part. So we're expecting the market to wick this 50% price range, 50% on the fib, and it happened here. We touched the lowest part, we broke below the previous low, we went to the 50, and the entry would be somewhere here, and would be expecting the market to move higher. At this point, we're going to get a pullback from here. I don't know whether this pullback will be bringing me down to this blue line here, which is the previous low here that was broken before. Some people call it a head and shoulders, but this is how I like to trade it. But this is the lowest part where you can enter the market. Let me show you the largest part, the actual fee. Let me show you the actual fee that we're going to be looking at. The actual feed is actually up here. This is where you get your feed. But then you see where the 50% mark is. This is where you might get a pullback into back back down here, and a takeoff maybe from this level at the 23.6 or below uh, down here. So this is the first pull up to the 50% fib, and then the market will come back perhaps down here, and then it will take off from there. So my trades are entered at the lowest point, take profit. I usually trade with two positions, and the first position that I take, I'll be taking profit with it here. And the second position will be collecting the swap. It'll come down here, collecting the swap, and take us to the actual take profit level on the British pound Singapore dollar. And that's where we're gonna be going. But the reason why I enter the market at the lowest point is because I hold two positions. The first will be held, and the second will allow us to come back down here and collect the swap all the way up there. So that's the system that I'm using. Sometimes I lose money with the system because I'm not patient enough to, I'll be trying to buy here, lose money, and try again down here and lose money. So the reason why I created this video is because trading arbitrage opportunities requires a lot of patience, and patience sometimes it will make you lose money, and because I lose a lot of patience. I mean, the kind of patience that uh, arbitrage opportunities require. Imagine looking at monitoring a pair like this and waiting for the whole 3 months for the market to just take off, or you might wait for like a whole month and lose the trade and uh, miss miss the trade. Instead of entering the market, you might. And in fact, in the past, I used to wait to take a trade for a long time, monitoring the pair. And by the time I decide to give up and forget about the trade, I will discover that hey, the market actually it has already moved, and that's what used to make me, I would get sick for the whole month. I would actually ban myself from taking trades because I feel bad. I waited for a long time and I quit. I had to quit like 3 days before the trade moves, and you know it's a very painful thing. It's very painful to trade arbitrage opportunities, but then if you have a lot of patience, you can actually take those trades. The advantage is that the movements are huge, and taking those trades, I mean, some people would imagine the guy who entered the market here. That person is still in profit. They're not even thinking about pound SGD anymore because it'll be moving higher for like the next 3 years. So that's the advantage of taking. Imagine all of the swaps that this guy. This is the weekly time frame. All of the swaps that this guy is collecting from down here. So that's the advantage of carry trading, and the disadvantage is losing your patience. Losing your patience. So we're still waiting. It's the 6th, and we're like 2 days away from the interest rate releases. That's the 6th. We're 2 days away. We're like one tomorrow. Tomorrow is actually the 7th, and the market has already moved. I believe that by the time we get the actual release, the market should be at least up here, or maybe up there. But I'm expecting the market to actually move away from the news releases. I was like actually expecting the market to be up here. I expected the market to move on Monday, but it gave us those, indecisive candles that you're looking at here. I expected it to actually move away, but this is how we take arbitrage opportunities. You need to know what's happening fundamentally, and you need to take preemptive trades in the direction that the fundamentals or the hedge funds are looking. And this lie that I was explaining to you, this lie that the consensus is telling you, this is like the biggest lie that you will see. Anticipating an interest rate cut where or with a healthy inflation. I mean, what are they trying to tackle? You cannot tackle inflation if inflation is doing what you want it to do. You need to do, if the inflation was doing the opposite, then we would understand why these guys are trying to tackle inflation. So here they're predicting an interest rate cut of 25 basis points, which is a lie. And right now, the hedge funds are doing what I'm expecting. They're investing in the market, pushing the market higher, pretending on the other side where they're telling you, oh, I'm sorry about that. where they're telling you that hey, the market will actually will be selling when they're actually anticipating this, but they're telling you on the other hand that hey, we're expecting to sell the pound. We're expecting an interest rate cut, which is a lie, and they're telling you that hey, you should expect this when they're saying you should expect an interest rate cut when they are expecting an interest rate hold, which is a bullish signal. So this is just the propaganda that these people are doing, and we already know about that propaganda. Tomorrow, I'm expecting something like a pullback to this level. I'm expecting the market to come up here. I'm expecting the market to pull back to maybe we have some tiny order block here that might be mitigated. For those who talk about order blocks, I'm expecting the market to pull back into this region and take off after that. I'm expecting something like this. So these are just the fundamental ways of looking at the market, expecting a tiny pullback and the market to go higher. If it does not want to do that, it might do the unexpected, which is a drop down to this level. And if it does that, then I will enter my second position. But I'm not expecting. I am not expecting the market to come down here. So this is the 10th episode. I will be showing you the interest rate hold of 25 basis points on the 11th episode. Even though I promised you that this would be the 11th the 10th episode. So I'll see you on the 11th episode, guys. And cheers. Goodbye, guys.